Welcome, listeners. Welcome, viewers. Happy to be here today with you, with my director of our HVS Atlanta office, Courtney Vris. She oversees all things Southeast US and pops around to the entire nation to help us with our wellness initiatives too, but lives and breathes Atlanta and is really in tune with what's happening in the Atlanta market right now. And I want to have welcome her to the table to have a conversation about Atlanta and what's happening. We're recording this in July of 2026, just for point of reference, and happy to learn more about this important market. Courtney, I'm going to turn the mic over to you to share with us kind of the underpinnings of the Atlanta market, what you're seeing there on the ground.
Great. Thanks, Rod. I am happy to be talking with you about Atlanta. It's important to lay the groundwork that Atlanta is a primary city in the Southeast. It's the capital of Georgia and is considered one of the top 25 hospitality markets in the nation. We're a hub for corporate offices. Many companies are within the Fortune 500 list. We're strong in the film industry, transportation. We have the world's busiest airport and the Delta headquarters, and of course, strong event and convention venues. So I'm just establishing the longstanding reputation and some attributes of the city that have earned this reputation, which don't seem to be going there. Yet when we zero in on the hotel market, performance has been soft compared to what this city was experiencing prior to the pandemic. What was a composite market, really in the 70% occupancy range, is now down to the low 60s or mid 60s occupancy. And then prior to the pandemic, Atlanta experienced pretty much a 10-year run of ADR growth year over year. And now we're seeing fluctuations in ADR. So then let's bring that through the year-to-date data. The most recent data we have available is through June 2026. Occupancy declined to 64%, but ADR grew about 2% to just above $130. That ADR growth is boosted a little bit from FIFA, the World Cup events. We hosted 8 matches, 5 of which occurred in June. So the city's holding on to RevPAR growth so far this year at about 1.2%, with RevPAR at $84. But that does put us in the bottom quartile of the 25 markets, the top 25. So it's likely that July will also see a little ADR bump. But what actually fleshes out through year end does, in my opinion, depend on how much hotels can hold on to occupancy. If there is further softening, it's likely that ADR will not continue to grow at this pace because we're a price sensitive market.
So why is Atlanta not quite keeping in step with some of the other markets around the country that are seeing a bounce back this year? We saw last year in so many markets with the turmoil surrounding the tariffs and with Canadian travel stepping back. So many of the markets kind of took a pause on growth, or RevPAR even went down. Now this year we're seeing the bounce back, particularly in ADR. ADR is just rocking and rolling, and is up now year to date in the nation. It's up between 4 and 5%, or maybe even a little more than that. So why is Atlanta not feeling the love?
Well, there are several ways to look at it, definitely. Our ADR growth is below, as you noted well, Rod, thank you. It's below what we see kind of nationwide. And RevPAR in 2025 is pretty much exactly where RevPAR was in 2019. The most, I'd say, convincing and most prominent reason for this is that Atlanta saw a significant increase in supply over the past several years. Um, we had, for example, in 2020, we had supply growth of like 5%. And if you look over the past several years, I mean, it's averaging around 2%. Um, and then if you focus in on the kind of like the core submarkets of downtown, midtown, and Buckhead, just from 2019 to today, there was about a 20% increase in total supply.
Wow.
So, and there were this is a positive thing overall because it's bringing in new product and high quality product that this city really needed. We had many of you who are familiar with Atlanta have heard about the Signia by Hilton, which is our convention headquarters hotel that opened early 2024 with nearly 1,000 keys. Um, a very beautiful luxury property opened up in kind of the Midtown area called the Fourth Hotel that opened in 2024 with almost 200 keys. And then Centennial Yards, which is a $5 billion redevelopment happening down by our Centennial Olympic Park in downtown. That's mixed use and it has several hotels in the plans, one of which opened last year, one which is going to open next year, and a few others in the pipeline. So there's just a ton of new supply, and the demand here is so dependent on commercial demand and conventions, which are coming back, but as we all know, it was a little bit sluggish, right, coming out of the
Mhm.
pandemic. And then we also, Atlanta is the headquarters for the Center for Disease Control and Prevention, which we know had some downsizing last year.
Yeah.
Offices are consolidating a little bit. So there are some challenges from just kind of the core demand that we're seeing as well.
Okay, great. Um, Kind of looking forward as we um, kind of claw ourselves out of this lower occupancy. Although I do hear what you're saying because I look at a lot of markets nationwide and I'll pull a trend and look at how occupancy is stuck at 64, but pre-pandemic it was 74. But then when you look at the actual occupied room nights, it's well above where we were. It's just that there's been so much new supply that
Yeah.
we just can't claw ourselves out of the 60s now because we were building these rooms based on what was happening in 2018 and 2019. And then when they come online in 2022 and 2023, it's like, whew, we're not quite the same kind of robust commercial corporate transient place that we were back then. But that being said, I do see cities kind of coming back, looking at creating new developments and slowly and surely kind of building that base back. What kind of new developments are you seeing in
Mhm.
Atlanta?
Yeah, Rod, I completely agree with you that it's easy to look at the numbers and feel pessimistic, but really we should be replacing that mindset with just realism and be
Yeah.
realistic about why these numbers are what they are. And there's a lot going on in Atlanta to diversify the demand by pushing a little bit more into leisure, which I think can really help us in the long run. And then also redeveloping some dated office buildings into Class A product. So I mentioned already Centennial Yards, which is mixed use. They have already delivered a multifamily building, a hotel, and then an entertainment venue that's kind of, I have yet to go, but it's currently like an immersive dome. um, so that's an interesting addition to Atlanta. Also, just topping off or topping out rather in Midtown is the newest high-rise office building to have been developed in many years. So that should attract hopefully some strong corporate tenants, and there's a residential component there as well. Um, Also, our CNN building, CNN relocated. They're still in Atlanta, but their former building is being redeveloped into a mixed use development with a food hall and some really kind of like activated spaces. And then not for nothing, we're big with sports. So we
Yeah.
did have the World Cup here. We've already hosted the Super Bowl recently. We'll host it again in 2028. And then looking forward with like collegiate sports, we're usually very strong. And I think we're already on the schedule for the NCAA Final Four in 2031.
Okay, great. Great.
Yeah.
I want to switch over to the transaction market. Given everything that's happening and that the great overview you've given, have there been any recent sales or are hotels changing hands down there?
Yeah, there have been sales, many of which are occurring in circumstances of underperforming or dated properties or distressed sales, auction sales. We don't see too much transacting over $200,000 a key. And if they are, there's usually something else kind of bundled into that or something behind it. Um, some examples of recent sales of properties that actually provide glimmers of hope for outlook as well are the W Hotel downtown that sold. I'm reaching back to 2023 with that one, but I mention it because it was acquired and then underwent significant renovations to relaunch as a JW by Marriott earlier this year. So old, maybe misfit product now coming in as maybe a better fit renovated product. Another good example is a uh, former dual branded Crown Plaza Staybridge Suites in Midtown is now planned to undergo a very significant renovation to relaunch as just a full service Marriott um, next year. Other examples include, for example, a Hyatt Regency up in one of our main office parks that only sold for about 108,000 a key, but is going to be undergoing significant renovations to convert and reposition in the market.
Nice.
I could keep going on and on with acquisitions at, again, a low price per key, but where there are, they're really seen as, I think, strategic investments to come in, reposition, and really kind of become a better fit and bring in new product. I think overall, this should help the ADR story for Atlanta as well.
Yeah.
So, we're not as much going to be limited by like poor quality product. And we can really kind of lean into being new and fresh for the demand that's out there.
Yeah. I find these redevelopments of the big full service hotels really exciting. It does take a seller really needing to be realistic that the property's kind of had its run and hopefully they've made good money along their hold. And now that they're exiting, now's maybe not the time to make the big money and just get out and get out at a low basis per key. Allow the next owner to put in that renovation and we've seen it work around the country where you get in at a low basis, you might have to put in 100 to 200 a key in a renovation. But then if you can hold it through the next upturn and really run it well, and you can start making really good returns on an annual basis, and then prep yourself for maybe that exit 5 years into the good run. And so it sounds like some of this is starting to happen in Atlanta. So it'll be
Yeah,
interesting
yeah, there's a
to see.
basis
Yeah.
reset for sure. Mhm.
So final thoughts to leave our listeners with. Any kind of like main takeaways here?
Yeah, well, like we said, I think it's a matter of kind of taking a dose of realism in transactions, to just be aware that the market is probably not going to get back up to 70, maybe
Mhm.
a few submarkets will. But ADR growth is really where the opportunity is as we get new, fresh product. So I really think that Atlanta is kind of just in a transitional phase now, and that's been reflected in the recent numbers. But moving forward, we should see things gradually grow again.
Right on. All right, Courtney,
Yeah.
thank you so much for joining me this morning. Listeners, I hope you've enjoyed this overview on Atlanta. Please do reach out to Courtney. Her contact information will be here on the screen here in a minute, and just be sure she is your go-to for any market really in the Southeast, but Atlanta in particular. Um, she can help you through any challenge that you're facing or help with any study that you might have. Courtney, thanks again. Great
Yeah.
seeing you. And thank you, listeners.
Thanks, Rod.